Micron reports earnings on June 24th. Guys, that is in 2 days. And the stock is up more than 750% in the last 12 months. Analysts are racing to raise their targets, and some are doubling them. At the same time, the options market is pricing an earnings move that may be completely disconnected from what investors think is about to happen. By the end of this video, we are going to break down the earnings preview report. We're going to take a look at the chart and the options chain along with a couple specific trade structures that I'm going to be watching before earnings. Now, before we talk about the trades, guys, we need to understand why this stock moved 750% in the first place. And let's just take a quick look at the chart to see what we're dealing with here. We can see from the chart, we hit this low at around $311 back on March 31st, which is less than 3 months ago. And since then, we've gone from 311 to, look at this. Micron is trading pre-market at almost $1,200 per share, right? That's nearly a 4x, 311 to 1,200. And guys, this is not a momentum story. It is an infrastructure story. Every major AI model that you're hearing about today, ChatGPT, Gemini, Grok, it runs on accelerators. And NVIDIA, they get most of the attention. But those accelerators don't work alone. They require high bandwidth memory, or HBM. Think of HBM as the fuel system for the AI economy. You can build the most powerful GPU in the world, but without HBM attached to it, the chip just doesn't perform. And that's where Micron enters the picture. There are only 3 companies on Earth producing HBM at scale, right? That's SK Hynix, Samsung, and Micron. That's the entire list. And at the same time, Microsoft, Amazon, Google, Meta, and every major hyperscaler are spending aggressively to build AI infrastructure. Demand is just completely exploding, and the supply can't keep up. That's why the chart looks the way it does. Micron recently entered high volume production of HBM4, its newest generation memory platform. The new chips deliver more than double the bandwidth of the prior generation while improving power efficiency by roughly 20%. That is not a routine upgrade, guys. It is a meaningful performance leap. And perhaps more importantly, Micron has already sold out of its entire 2026 HBM production under binding contracts. That's the backdrop. Now let's look at the numbers. Micron reported fiscal Q2 2026 revenue of $23.9 billion. That is up 196% year over year. It marked the 4th consecutive quarterly revenue record and the largest sequential revenue increase in company history. And management wasn't subtle on the call. The CEO specifically referenced significant records again heading into Q3. And that's the quarter we're about to see reported in 2 days. Current guidance for the upcoming earnings report calls for revenue around $33.5 billion. Gross margin near 81%, and EPS approximately $19.15. Think about that for a second. 1/4 of Micron earnings is now larger than the company's entire annual revenue was only a few years ago. That is how quickly this business has transformed. But that's also where the tension begins. Because the stock is sitting near all-time highs, right? Expectations are elevated. And Goldman Sachs just issued a cautious note warning investors that much of the optimism may already be reflected in the price. That's the setup. Massive fundamental momentum, extremely high expectations, and an earnings event directly in the middle of it all. So for options traders, that's where things get interesting. The business story explains the 750% move. But the options chain tells us what their traders expect next. And right now, the market is sending a very specific message. So let's look at the chain and decode it. And guys, what we are going to be using, the software we'll be using in this video is TastyTrade for the options chain and thinkorswim for the charting. I have links in the description for the free downloads of each platform. Now guys, if we look at the chart from a technical perspective, Micron remains in a powerful uptrend. This is the biggest uptrend. SanDisk, right? Maybe has a better uptrend than this, but almost all the AI names look like this. Micron, though, specifically, 311 to 1,200 bucks. It's insane, right? We're making higher highs, higher lows, consistent institutional accumulation. Like earlier this year though, the stock bottomed at, this is around 650 and again at 311. Since then, we're probably going to crack 1200 bucks today. So on the downside though, the key levels are straightforward. Our first support zone is right around here at 856. The next one is right here at 650, and then we're dropping all the way down maybe to these prior swings at 473 or this swing low at 311. Those are the support zones to watch. So if the earnings disappoint, that's what we're looking at. Do we fall back down to 850? I don't know. 650 or all the way, I don't think we're going back to 311. But now let's talk volatility, because this is where the setup becomes unusual. And if we pull up TastyTrade to check out the options chains and the volatility, we can see the IV rank of Micron is currently sitting at a 92.6, which is insanely elevated. I think anything over 30 is high and tradable as a premium seller. So we've got multiple analysts here raising targets aggressively. And at the same time, Goldman Sachs is urging caution. So who do we listen to? The result is a genuine disagreement, right, inside the options market. And the disagreement is what creates the volatility, and the volatility gives us the premium. So buyers are paying up for exposure and sellers are being compensated accordingly. So if we open up the options chain and just take a look at what we're dealing with here, the June 2026 options, okay, the expected move, and this hasn't refreshed yet because the market hasn't opened yet on Monday, but the expected move goes all the way down to $960, right? And to the upside, we're looking at 1305. And we could see that the expected move is outside the one standard deviation. Okay, so if you are thinking you're just going to go ahead and trade a one standard deviation call and a one standard deviation put, look at this, guys. The expected move is outside the one standard deviation line, and it's at a 35 delta. Okay, that means we can go all the way out to a two standard deviation move, right? A 15, 16 or 15 delta, $1,450 to the call side, and still collect $9.50 on the call. If we look at the put, we can go, not quite two standard. The put side is actually, there's way more call skew in this. They think it's going up. So the put side, the one standard deviation is at a 10 delta only. So we have to stay almost in the expected move. So the first trade that we're going to look at here in TastyTrade is a defined risk bull setup, right? So you're bullish, you think guidance is going to exceed 33.5 billion. And if Micron is going to extend their AI narrative into 2027 and beyond, you believe these contracts are set in stone, they're going to keep raking in the cash, increase production, and the stock's going to keep ripping, right? We need upside exposure in that case. So what we are going to be doing is we are just going to do a straight up bull call debit spread. Okay, so we're going to, we're probably going to do something like buy the, let me erase this. Let's just say we're going to buy the 1200 and maybe sell the 1250. Okay, so we are going to be paying $15, right? $1,500 for this trade. And that means we would need Micron to trade at $1,215 to break even. And then we could make, upwards of 3,500 bucks on this trade if Micron does close above 1,250. So the maximum profit on this trade would be the width of the spread, which is $50, minus the debit paid, which would be $1,503, so $3,500. That would be our goal here. Now, if Micron goes south, we're going to lose it all. Okay, that's the risk of the trade. So we're not paying for a routine move here, right? We are positioning for a breakout. We are positioning that the AI narrative continues on and Micron rips to the upside, and we are going to make money because the stock is going higher. Now, the second trade, guys, this is called sell the volatility, right? We're going to be contrarian here. So the options market is already pricing, maybe an 11 to 14% move. It depends on how this opens today. What if that's too much? Historically, Micron remains inside its implied volatility move roughly half of the time. An elevated volatility, right, a 92.5 means premium sellers are being paid well to take the other side. That is where selling a call spread comes in. So instead of being bullish, we are going to be bearish and say, no, there is no way this thing can keep ripping up higher. It needs some time to digest the move. So what we could look at here, in this case, if you think Micron is not going to go up that much higher, right? Let's go out 2 standard deviations, or we can go out just in between the 1 and 2 standard deviation move, and let's see what we can get by, say, sell the 1350 and buy the 1400. What do we get here? Gosh, we can't really get much. We only get $6. So that'd be like making $630 for risking 5,000. No way. Okay, what if we go 1300, 1350? $8.45. Guys, we might need to look at an iron condor here because I don't think we're going to have enough risk reward ratio to do a straight up selling a call vertical. Okay, unless you're pretty optimistic that Micron's not going to crack 1300, and I'm not. I mean, look at the way this thing is moved. There's no telling. This could go straight to 1500, right? So if we do that, let's go see if we can add on something to the put side to offset that. So let's like sell the 950, maybe buy the 900. See what we can get off of that. So this is a little better. This lets us have, we're going to collect almost $1,500, and we're going to have a 50-point wide strike. So if we pull out the calculator, we have 50 divided by 3, because I always like to collect 1/3 of the strike. We are almost there. We would need to collect $16.66 for this iron condor to work. When we do that, we want to at least collect 1/3 the width of the strikes. That means worst case scenario, yeah, we lose, it either breaks to the upside or downside. Either one gets breached all the way. We lose $5,000, but we collected $1,600. That's our risk. And trade number 3, guys, the IV expansion trade. This is the one most retail traders overlook. We're not going to be trading direction. We are going to be trading uncertainty. So implied volatility has been expanding as these earnings are approaching. And if that trend continues through Tuesday, we could see these option premiums continue to increase, which creates an opportunity, right? We can buy the premium now, and it's very elevated, 92.2, but I've seen premium hit over 100. And we can sell the premium before earnings, right? Looking for a little IV expansion. Never hold this one through the report. That's the rule. So in order to make this trade, what we would do is probably just go something at a 1 standard deviation. We would just buy the wings, maybe at the expected move, or somewhere around a 35 delta-ish. So let's erase this, and let's just put on a, let's see, where's the delta here? 35. So let's just say we are going to buy the 1300 and buy the 1135, or whatever the stock is at right now, guys, right? When the market opens. So in this case, the gamble here is we are buying a call and a put, and our hope is that IV continues to rise into earnings and we get out right before the close, before they report earnings. Now this is one just to play the IV side of the options. You're not going to make a ton of money here, but you might be able to scalp a little bit of profit. So guys, based on this earning report, we are mainly looking for 3 different options. So the bull case for Micron is revenue is going to exceed $33.5 billion. Gross margins reach or exceed 81%. And management extends visibility into 2027 and 2028, where HBM demand continues to rise. The stock could gap higher by 15 to 20%, right? If that happens, our call spread is going to perform the best. The iron condor, or even just selling the vertical, right, that would struggle on the upside. And the IV expansion trade would already be closed here. But the base case is Micron would maybe beat modestly. Margins come in around 81%. Management would reaffirm demand without materially extending future bookings, and the stock could move 5 to 8%. In this case, our iron condor would perform the best. The call spread would remain profitable but not fully realized, and the IV expansion trade is already closed. The bear case. Micron beats Q3 but guidance disappoints. Perhaps NAND weakness offsets the HBM strength. And perhaps management misses the whisper number. The stock could fall 10 to 15% here. This thing is priced for perfection. It is effectively the Goldman Sachs scenario. So the call spread would expire worthless. The iron condor would take pressure on the put side, and the long put would cap the loss. The IV trade is already done. So we got 3 risks, guys. Risk 1 is the whisper number. Consensus is 33.5 billion, but whisper expectations are higher. Analyst estimates range from 33.7 to nearly 41 billion. Micron could technically beat the number and still sell off hard. And risk 2, NAND contamination. HBM drives the narrative, but Micron still has substantial exposure to traditional DRAM and NAND. Weakness there could dilute the AI story. And risk 3, guys, is the IV crush. Any long option held through earnings could face a severe volatility collapse. We saw the IV rank was 92, right? So even if you get the direction correct, know your post-crush valuation before entering this trade. So guys, this is the framework. When implied volatility feels overstated, sell it. When you're directionally bullish but want defined risk, use a debit spread. And when you want exposure to the setup without the earnings event itself, trade into IV expansion and leave before the report. Those aren't Micron specific concepts. They are earnings season concepts, and they'll still apply long after this earnings cycle ends. So we saw Goldman's cautious, analysts are raising targets, and Micron reports June 24th. So what's your trade? Are you selling volatility with the iron condor, or are you betting the AI memory cycle has another leg higher and you are going bullish? Drop your strikes in your trade down in the comments. This is Luke with the OptionBomb, and I'll see you in the next one.